Morning traders. Welcome to another session of Market Snapshot. I hope we are all excited. Uh, Everyone who's joining in, say hello. Okay. So today is on a Wednesday, and it's been 100 days of Trump in office, right? That was yesterday. Yeah. So let's see what we will be looking at, some of the impacts of his policies in terms of GDP. How has that affected the US? And in terms of our assets, like if you're trading the dollar, what moving forward will be the impact, right? So let's have a look at the economic calendar. So we normally say every day as a trader, when you wake up, you need to make sure that you've looked at fundamental news, because a good trader is one who combines fundamental analysis and technical analysis, right? You want to see the foundation, like why is the market moving the way it's moving, right? So if you look at it from this context, if you're a techie, like a technical analyst, and you miss out fundamental analysis, then there's most likely there's a high chance you'll have losses, deep ones. Let's look at this example. If someone who didn't look at the tariffs, right, and they were trading, let's say Nasdaq, right, they were buying all along, it was a buy for them. You see, they've taken a huge hit, and most of them have exited their positions, right? So it's very important for us as traders to make sure that when you wake up, have a look at the economic calendar. We have so many economic calendars. We have Forex Factory, where we have my FX book, we have investing.com, right? You have trading economics, all these, right? But we would recommend more on Forex Factory. Get there, have a look at those high impact news. And in our case here, we are looking at the red folder news. So the first news today we have, remember this is NFP week, right? And so we expect a lot of volatility going into Friday. But a precursor to that is the ADP, non-farm employment change. What is this basically? It's a report that provides an early gauge of US private sector job creation, like how many jobs have been created in the private sector, right? We saw that the number was high last time, 155k. The forecast back then it was 105k. And you see, it came out quite strong. This time around, as we can see from the forecast, is that this number, traders or even investors expect this number to be low at 114k as compared to this. But just like we saw last time where it was 105 and came out 155, nothing stops this number from coming out from maybe what we have 114 to maybe 150, right? Or 180. I don't know. No one knows these numbers, right? That's why we have this actual number that we'll expect at 315. So as traders, we really need to look at this because it gives us a scope as to how the US economy is performing. Remember, it's all about jobs. Why are jobs important? If you have a job, you have money to spend. If you have money to spend, that means money is circulating in the economy, right? Jobs are being created in factories to produce more because there's a demand, right? When there's no money in the economy, there's no demand for products. Like we can see what's happening in Kenya right now, right? You'll hear people say hakuna pesa. There are business people who are opening their shops at maybe even 6 a.m. and they don't sell anything for a whole day or even 2 days, right? Why? Circulation of money is low in the economy. So that could be because of lack of jobs, and of course you all know how the economy is, right? So the same in the US. This data is very important. So if this number, now let's interpret this. If this number comes out higher than 114k, right, we expect the dollar to strengthen. Anything lower than this, we expect the dollar to weaken. So anything 110 below, it's not good for the dollar. Later, 3:30, we'll have the Canadian GDP. GDP, basically here, you're talking about the value of goods and services produced in that country, right? So if the number is higher, right, so we can see the previous number of 0.4%. Traders are expecting that it will be 0.0%. So if it comes out 0.1, 0.2, the Canadian dollar should strengthen. Yeah. Uh, a high GDP shows that the economy is robust. So many things are playing out in that economy. That's why, like in Kenya, you'll hear the government saying the GDP has gone up, to try and show that the economy is healthy, right? So economic activity is very important, and that means factories are working, the service industry is working, and that presents now, of course, the overall goal to this is job creation and circulation of money in the economy. So a high GDP will be good for the Canadian dollar. If this number comes out lower than this, remember we saw Canada elect the liberals yesterday with a view of countering the US, right? So let's see how that plays out. Any number lower than this, then that's not good for the Canadian dollar, right? So in that case, you look for opportunities to short Canadian dollar. Let's look at 330. Also, we'll be looking at the advanced GDP. This is very important because it's a quarter thing, and here we want to see. We've just seen 100 days of Trump's presidency. The initial 100 days of Trump's presidency, we've seen havoc in the markets because at the end of the day, Trump was very clear, like he's coming in with America first policy, right? So that means he wants jobs in America, right? If that means guys exiting China to come and set up factories in the US so that they do not so that they are not exposed to the tariffs, then well and good. So that is what we are looking at. So the GDP, guys, there's a projection that there could be a slowdown in GDP due to the tariffs wars and the uncertainty thereabouts. So let's see how that will come out. The forecast is 0.2%. Kindly look at this. The previous number was 2.4%. Now this time around, traders are expecting the number to be very low at 0.2%. So if this number comes out higher than this, maybe 0. I don't know, 0.5 or even 1 or even 2, it will be the markets will be volatile because it will be way above what traders are expecting, right? So we could see the strengthening of the USD coming into play. Now, once again, just like the GDP on the Canadian dollar, it measures how healthy the economy is, right? And of course, this is all about the service industry and the goods industry. Now, the other one, the employment cost index, not so much of an indicator, but when the numbers come out higher, of course, the previous number was 0.9%. Here, traders are expecting the number to maintain. So let's see how that plays out. Then later at 5, today we have high impact news coming in. We have the core PCE price index, right? Why is this important? It's an inflation gauge, basically, right? So if you come here, you'll get to have a clear understanding of what it means. It's the change in price of goods and services purchased by consumers, excluding food and energy, right? So if there's a huge change, right, then that of course will bring in the aspect of the inflation, right? So it's very important that we look at it from the angle of inflation. So if this number comes out higher, right? If this number comes out higher, maybe 0.2, 0.3%, it's good for the dollar because there's that whole expectation, yeah, but that the economy is doing a bit well. So because of more cash flow in the economy, right? Because remember, when there's money circulating, if you have money, you are able to buy whatever it is that you want to buy, right? So imagine all of us have money and there's a demand for something, like everyone wants a pair of Nike, right? So of course the pair of Nike will the price of that Nike will go up, right? So it's always a good indicator. So if this number comes out higher, it's a positive. If it comes lower, then of course it's negative for the dollar. So those are some of the expectations we are expecting to some of the fundamental news we'll be expecting to come out, and our work as traders is to have a trading plan around it. make sure that you've mapped out your areas of support, resistance, supply, demand, whichever strategy it is that you use. Map out those areas and wait for those news to react. If price comes to those particular areas you'll have mapped out, as we will do, then wait for confirmations. If your confirmations line up, then you can enter those trades, right? So with that simple understanding, let's have a look at our MT5 for now, the technical analysis. We've just done fundamental analysis, so now let's do the technical analysis. Okay, so let's see how the markets are playing out. Remember, the dollar has been taking a hit, so let's see whether there's that continuation of the same. Our BTC, we start off with BTC. Wait, where's my analysis? Oh, I still have my analysis by the way. Of course, didn't play out as I've been expecting for it to drop to 69,141. But then I'm looking at a possible push to 86,815 and then a drop. Remember, as a trader, someone who's taken a beating before, I stick to my trading plan. I'm not a victim to FOMO, fear of missing out, right? Uh, I'll just stick to what works. If it doesn't play out well and good, let it go. We have so many asset classes here that you can trade. So I'll still maintain my long-term outlook on Bitcoin, 69,141. If it ever comes here, well and good. If it doesn't, well and good, let it go. Right? So that's BTC. Gold. Yesterday we were looking at some analysis on our mentorship where we were looking for gold to test this area and then be bullish. Didn't go as expected, right, till here, but we can see there was a how many pips move? 200 and okay, actually it's 300 pips, right, from our entry. Yeah, those in the mentorship class, you can remember what we did. By the way, you can join our mentorship class from 11 to 12 as we speak. There's a class that is ongoing. So this is where we get to look at strategies. We get to analyze the markets from Monday to Thursday, and it's more of it's actually educational analysis where we look at the strategy and go to the markets like we are doing right now and try and decipher and see where uh, the opportunities are. So that was our outlook on gold. We were looking for that more bullish move, but we can see now this area has already been breached, right? So for those who know the strategy, we already had a hammer, right? And so this was a good entry, a test to this moving average, and there was that pips move. Remember, we've been encouraging people that at least, especially when you're starting out, book your 30 pips, right? Book your 50 pips. You'd rather have money than, take a trade with the goal of hitting 100 pips, gets to 80, and then goes all the way to negative 20. Yeah, it's quite disappointing when you have that experience, right? So book your profits. You'd rather have your 30 pips. If you're using a lot size of 0.01, that's $3. Not so many guys are earning $3 in this country, right? If you're using a 0.10, that's $30. That's some good moolah for you, right? So let's remove this now that this is expired. Let's try and seek opportunities. I would want to see gold test this low. I would want to see how gold reacts to that low. Before considering any bullish move. What is this low? For those who've been attending the mentorship class, this is what you call the weekly low, the low that was set on Monday, right? So we would want to see gold test this area because we have some buyers here, and then maybe from there we can see some bullish move. So I would want to see that move, and maybe from there we could see a bullish play. So what I'm doing is mapping out areas. Like I've said, you need to map out your areas and wait for, especially at 3 when the New York session opens, when we see market moves. If they come to these areas, look for your confirmations before you enter a trade. What do you need to look at, right? We have the morning star. If, for example, you're looking for buys, you need to see a morning star pattern, right? A pattern like this one. If you see a morning star pattern, that's a good indicator that buyers are strong. If you see a bullish engulfing, right, that's an indicator that buyers are strong. If you see a hammer, right, that's an indicator that the markets are strong. So you need to really identify some of these patterns before confirmation, sorry, before entering that particular trade. That's gold. Let's have a look at USD. Yesterday, once again, in the mentorship class, we were looking for a buy move and then a sell, right? So didn't get to the area we expected because we were expecting it to hit that 871. It hit what? That 867. That's like 4 pips short, huh? And then there was that drop of around 48 pips. Anyway, so let's remove these analyses and map out these afresh. So where are we expecting? What are we expecting on USD card? I'm still looking at a bearish one. I would still want to see USD card test this low. This is last week's low, right? Last week's low is an area where there's an accumulation of buyers. So I would want to see a USD card get there. Okay. In the meantime, we might want to see USD card test out the Asian high, which is this high over here. Yeah, so Asian high, and then maybe from there, look for sell opportunities for, is it 60 pips? Yeah, 63 pips to test that last week's low. Yeah, so that will be my outlook on USD card. Remember, once again, you need to have confirmations. Just because price has come to this area shouldn't be a reason enough to enter a sell, right? You need to see confirmations because we've seen areas of resistance being breached, right? The market can easily breach this area, especially during high impact news. We could see a whole lot of breaching, a bullish candle going through it. But then, if you are a trader who follows confirmations, then of course you wouldn't enter such a trade. USD, we were looking for that bullish move, a sell, and then a bullish move. Didn't really get to our area, but a bullish move played out. So let's remove these analyses. What are we looking at? This low, last week's low on H4. It's an area I would want to see a Euro USD test. So I'll be looking for that sell. So I'll be looking for sell. There's also a possible move to the weekly low. This area here, the low of Monday, is an area where there could be some support. But if it breaches this area, you should probably now see it get some resistance, some support at last week's low. So I'll be looking for that bearish move. USD JPY. Yesterday we were looking for this class was at around 11, so we were looking for a bullish to this level and then a drop with a take profit around the entry. Once again, this is where as traders it becomes frustrating, but missed our entry with 3 pips, came to 142.75. Our entry was 142.78, right? So there's always that risk, but then if you have confirmations, then this confirmation here, this bearish engulfing was your confirmation to enter that trade, right? Because this signifies that the sellers are quite strong in this area, right? Especially after this double top, the M pattern that formed. So anyway, there was that drop, and our area of support held to where we can see the market is at right now, almost going 100 pips. We are just shy 7 pips, so 93 pips. So let's remove this analysis and map out USD JPY afresh. I would want to go to higher time frames. That's an area 143.30. An area that I would want to see USD JPY come to, and also the weekly high, which is the highest price in the week, which was Monday's high, right? So if you go to lower time frames, we should see this very well. This was the high of Monday, right? Tuesday and today, Wednesday. So I'm still looking at that bullish push on USD JPY. Let me look at possible test. So yeah, I would probably be looking for opportunities to buy USD JPY from 142.76 to that area, and then we could also see USD JPY go to that high. Audi USD. This one really didn't play out as expected. We were looking for sells and then a bullish move. Of course, that was the analysis until the market invalidated these with a whole almost 30 pips. Yeah, almost 30 pips move. So let's remove this analysis. This shows you that at some point in time you'll have some trades that don't play out, but remember, what would have made you enter that trade? Confirmations. If you don't see the confirmations, you might want to sit on your hands. So let's have a look at the low of last week as a possible area of support. 63.43, that's around 43 pips from the current market price. Then let's look at the weekly. Okay, so we can see what's happening. For those of us by the beginners class today, anyone who's been attending our beginners class, you can see how powerful the moving averages are, acting as resistance for 2 weeks now, right? You can see that resistance, and now this resistance that's playing out. courtesy of that 50 EMA. So I would want to see this bearish push to maybe this area, or this area. So you have those two possible areas of support, right? First one is last week's low, this one, and then the moving average. That's some of the areas I would want to see how DUSD get to. Okay, so let's look at GBP USD. This is another one where we are looking for sells and then a possible bullish move. Didn't play out as expected, right? So that has been invalidated. But then again, if you're looking for buys, we can't see any candle here signifying. Even if price got there, you couldn't enter this trade. Why? There's no footprint from buyers, right? So you just let it go. Okay, so let's redo this again. Go to higher time frames, and we want to have a better understanding of where we are at. So if I look at it from higher time frames, I'm looking at that as a possible area of support. 33.26, that's like 42 pips from the current market price. And what we can see on GBP USD is something we've been learning in our classes. Last year's high, we can see last year's high. The high of 2024 is the one that is acting as resistance, right? So if we narrow this down to lower time frames, you should see this. The high of 2024 is the one that is acting as resistance. You can see something interesting here, a shooting star pattern on that high, right? Signifying that the sellers are quite strong. Yeah, that shooting star pattern. So I would still want to see that bearish play coming in. Yeah, so that will be my outlook on GBP USD. We could see it get here. Actually, let me lower it down to this order block, this bullish order block, the last bearish candle before a major move up that broke this structure, right? So let me bring it down to these 60 pips, right? Yeah, so that's what I would want to see on GBP USD, a bearish move. But GBP USD, knowing how this pair at times behaves, it may decide to first go up, right? It may decide to come here. It may decide to go here. So if I were to look for opportunities, actually, I would sell GBP USD from 33.98. I wouldn't fall for this move because at some point in time, GU will tend to retest this area and then drop, right? 33.98, maybe 3400, which is the a quarter point round number, and then drop. So that will be my outlook on GBP USD. UT100. UT100, we were looking for drop. The sell played out very well in as per the projection. And then the first hit, remember, for those who attended our class, remember this class we were analyzing at 11. So if you look at which candle, the 11th candle, is the class ended at 12. So at 12, we were here. This is where we were looking for sell opportunities. You can see what our take profit area was based on an area of support. And you can see when market got here, buyers pushed the market up, right? Because of this Asian low. Those who've been attending our mentorship classes, they know this is called the Asian low. It's an area with an accumulation of buyers. So we can see the reaction of the buyers on the Asian low when price got here. But eventually, price breached this area. But we can see something interesting. For us, you'd have to look for confirmations before entering, right? So we can see a bullish move on Nasdaq didn't get where we expected, missed with a few pips because the target was somewhere up here. If we look at it from higher time frames, the target was missed with a few pips, 1964 too. So let's do this again. Let's map out Nasdaq and see where the opportunities are. So I will keep insisting on this one. Make sure that you trade based on confirmations. Don't just enter a trade without looking at confirmations. That's for your own good. Okay, so on Nasdaq, I'm still looking at a bullish play, but I would want it to test yesterday's low. Sorry, I would want it to test yesterday's low. I would want it to test yesterday's low before moving up. So I'll be looking at that short trade to 19275. Then from there, I can now look for a bullish push to test maybe yesterday's high. Just want to be conservative on this one. So that will be my outlook on UT 100. Think that's it for us in terms of analysis. We've done the majors and Nasdaq. Let me have a look at your questions. Hi, hello everyone. Will GBP USD drop quite well after testing last year's high? Well, let's see how that plays out. We've already seen that shooting star pattern. So let's see whether remember, at the end of the day, the US, the uncertainty in the US is what is leading to some of these moves. So until that stabilizes, let's see how that plays out. ADP and NFP will guide on the direction. Yeah, thank you, Ken, for that insight. Yeah, let's see how, especially NFP on Friday, that sets the mood for our trades. But then again, we have so many dynamics in play. Trump, remember, this is Trump's presidency. Any tweet from him will just cause chaos. So be aware of what's happening, the geopolitics, right? The run-ins with China, and the run-ins with the EU, and all this geopolitics. Just be in the know. Can one combine order block strategy with supply and demand trading without contradicting oneself? Why not? Listen, at the end of the day, you need to have confirmations, right? If you're using an order block, an order block is also an area of support. Some of these words are just words that came up. But the market has always been supply and demand, support, resistance, right? So you just need to have confirmations. If price comes to an area you've defined as an area of support, look for confirmations. And some of the confirmations are something like a bullish engulfing, a morning star, a hammer. If you see some of those patterns, it's game short for you, right? Yeah. JPY, Gerald, it's really hard to call JPY. Why? JPY is a safe haven asset. When there's uncertainty in the world, most traders jump into it. It's JPY. Did we analyze gold? Oh yeah. It's JPY, CHF, and gold. Those are the currencies that it's really hard to make calls on them, especially during this time where we have the tariffs playing out. It's a huge risk because any small tweet from Trump and everyone goes to the safe haven assets and they rise. So it's really hard to make that call, whether strong or weak, yeah, in light of the geopolitics. DXY still looks weak long term, but then again, we can see some bullish move into it. Massive sell on gold. Let's see how that plays out. Also, I would like you to talk about how to fight greed in the market. I'm so greedy. Welcome to the world of having a good strategy. Anytime you have a strategy that is working, you tend to be greedy, right? Because you've been seeing consistent results. You get tempted. You've been using a lot size of 0.01. You have 10 winning trades. You decide, you know what, I'm a guru, let me increase this lot size to 0.10. Then the market is like, we've been waiting for you, sir. So you take a loss, right? And this is where, like, now at times I think the best school fees when it comes to controlling your emotions is losses. You'll hear traders tell you that, like, if you've never made enough losses, then you still are new into the game, right? Unfortunately, it's you making losses until you have a conversation with yourself and say, why will I keep making these mistakes again, right? So greed, this is something we discuss in the mentorship class, but I normally advise people that you can have 3 accounts. Personally, that's how I found a way of controlling my greed. I have 3 accounts: a daily expenses account, uh, a monthly account, and an investment account. So daily expenses account is when I feel I want to be really greedy, right? I have this 100 USD account, that when I feel greedy, I can drop a 0.20 lot size on it, right? In most cases, you're greedy because of a certain need, something that you want to cover. So I take that greed to that account. That's how I deal with it. I'm just sharing my practical way of greed, because we are humans. We get to be greedy. This is why most people, you'll see, they are running away from trading to come to creating bots and everything. So when I'm greedy, I go to my daily. If I blow it, I'm like, okay, peace, I'm out. Yeah, but then I still have that monthly account and the investment account that is consistent. Simon, we've already done that, right? We've done the analysis on how to buy or sell. For more on this one, please, you might want to join the mentorship class. Simon, send me an email to robert.mbogo@fxpesa.com. Yeah. And I'll share with you the link to our mentorship class where you can learn the strategy. On JPY, I wait for BOJ tomorrow. Awesome. Yeah. Yeah. So BOJ, we have that. And then, of course, the uncertainty part. So the Japanese yen uh, has so many considerations, especially by it being a safe haven. Cheers, man. Now, maximum is 3 accounts. Yeah. If you go to your portal, you can create a maximum of 3 accounts. Yeah, you have to put in the practice, Jesus favorite. Yeah. This is not a get rich quick thing. Yeah, it's something that you build over time. It's all about knowledge, skills. You must develop that for you to have results long term. Okay, I think that's it. Thank you guys for the engagement. Let's see how the market moves. Make sure that you're using risk management. You can't afford to be reckless. You need to make sure that you have risk management so that you have capital to trade next time, right? Okay, otherwise, thank you. Cheers. See you.